Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Saturday, April the 13th, 2013, and here is this week's weekend review brought to you by wallstreettrading.com. Before we get into the video here, I hope you guys are enjoying your weekend so far. As you guys know, the earnings season is kicking off, so we have a lot of things to go over. As far as being prepared for the markets, key levels to watch on the market, earnings, plays, calls. We'll be looking at those in the chat room in the morning. So make sure you get there to the room early in the morning. To get to the chat room, you want to make sure you go to wallstreettrading.com and sign up for the 14-day trial to My Wall Street TV. If you have any problems or any questions, send me an email at ccooper@wallstreettrading.com. So let's go ahead and get into the video here. Want to first off by taking a look to see how the sectors and some key indices, of course, closed for the week here. Starting off with the NASDAQ. The NASDAQ was up 2.26%. The Russell 2000 was up 1.22%. The S&P 500 was up 1.65%. Crude oil was down 2.99%. The OIH was up 0.93%. Gold got smashed this week. A lot of the selling pressure came in on Friday, yesterday. Gold was a little bit stronger throughout the week, earlier in the week, I should say. And then we got that big selling pressure on Friday based on the news that came out of Cyprus. And just in general, as you guys know, we do a lot of technical analysis, and the technicals were set up to the sell side. We've been talking about this for the past couple weeks, if not months, in the videos there. And you guys could go back to our archive videos and see how we called the breakdown of the gold miners a couple months back. And, they've just been on the sell side. So hopefully, you guys were not caught up in that action. But as you can see here, GLD was down 5.40%, and the gold miner was down 7.01%. Financials were hanging in there. They were up 1.43%. Retail stocks were very strong this week. I got a couple names that I want to show you guys. They were up 3.24%. And the volatility index, the fear indicator, was down 8.57%. So there still seems to be no fear in the market, as you can see here. But let's go ahead and take a look at these charts to see how we're setting up going into next week's trading. And the first chart that I wanted to show you guys was the monthly chart of the SPY. As you guys know, the SPY hit new all-time highs this week. The previous all-time high was 157.52. We currently are trading at 158.80, which was Friday's close. So take a look at that. If we can hold above these 157s or so and build a high base, I would assume that the market's going to continue with this trend. Let me put the studies back on the chart here because I took them off so I can show you guys a clean pattern. And I want to show you guys something that's pretty interesting here. First, starting off with the chart, of course, you can see the monthly chart is trending above the short-term moving averages on the monthly here, the 5, above the 5, above the 8. Something that I want to show you guys here is the closing prices, though. One thing, notice how the volume is declining. All right, not saying that's a bad thing. Like, obviously, most of the time we float up on a light volume anyway, but just want to show you guys that volume has been declining for the past couple months here. 1, 2, 3, 4, 5 months so far. All right, not saying that we can't push up with that volume. Just wanted to point that to you guys' attention. Now, taking a look at the closing prices here, we have 1, 2, 3, 4, 5 confirmed consecutive higher closes on the monthly time frame. And you can see every time we get, let's see, the longest one that we had so far, this one was 1, 2, 3, 4, 5, 6 consecutive closes. And you can see that one chugged up a bit, then pulled back for 1, 2, 3, 4, 5 lower consecutive closes. We had this little breakout action right here. 1, 2, 3, 4 consecutive higher closes. All right, 4 consecutive higher closes right there. Then we had this one right here, another 4 consecutive higher closes, traded sideways in this little consolidation. And now out of this break we have had just in general, we had out of the breakout right here from this little consolidation, we had 1, 2, 3 confirmed higher closes. But in general, for the past 5 months, we've been getting confirmed higher closes. So there's a lot of bullish action going on in the market right now. I've seen a couple of guys trying to pick tops in the market on intraday basis, or even like on a beginning of the week basis, and just get crushed as the dip buyers still remain in the market. So let's go ahead and take a look at the weekly chart. So in general, you want to be careful trying to short this market until you get a nice setup on the daily and you start to see them turn over and lose momentum on the 60 minutes in the dailies, Especially if you're a little intermediate term trader and trying to ride this wave that we have going on right now. You want to make sure you watch those daily time frames and those hourly charts. But again, just keep on staying with the trend here. Taking a look at the weekly chart of the SPY. SPY has been trading in a range here between 154.40 and 156.62. You can see after this four week, or I would say 5 week consolidation right here. Okay, the SPY, the S&P 500 broke out this week. So the level to watch in the SPY is 156.62. Call it 156.60, 156.50. Either way, just know that this area is going to be a level that you want to watch if we were to pull back here in the short term going forward. That's the level you want to watch, 156.60. But some targets that we have to work off of. This little upward channel that we're in on the weekly time frame here gives targets of the SPY up towards the 163.94 level, call it 165. So that's the next target, folks, 165 on the SPY. And we got it pretty simple by just drawing these little trend lines for these key inflection points. 1, 2, 3. Draw your trend line right here. Then you draw a little parallel channel. You get some nice little forecasted levels. And that level that gives us the channel gives us a forecast of is this price right here at 165. Okay, let's take a look at the daily chart. The daily chart looking pretty good here. Again, this 156.84, 156.60 area was the resistance level, but now you can see we broke above that level on Wednesday, and we had 3 confirmation closes above that level, which is pretty good. Little pause day on Friday in the sense that we closed lower than the previous day, but at the same time, again, as long as we can hold above this 156.84 area, 156.60, I think we're in good shape. We may need to consolidate a bit above this level since we did have a nice little power move from that gap down from the jobs number that caused a nice little short squeeze in the indices and especially in the Qs, which we'll talk about here shortly. So that's how the SPY is looking. Let's go and take a look at the Qs. Want to start off by taking a look at the monthly chart to see how this is shaping up. On the Qs, guys, one thing you need to notice here is that we're at the 50% trend line or 50% Fibonacci from the tech bubble sell-off from back here in 2000, all right, to the low that we made right here in 2002. We tried to break past that level last September. We failed, and we're trying to break past the level again. The last September's highs that we had right here were is 70.58. So if we could break above that 70.58 level, we could start making a nice move back in this upper part of the channel up here towards the highs. And that's why we're looking at these technology stocks and these stocks that are heavily weighted in the Qs, so we can see which one's setting up with the breakout setups if we were going to in fact break out here. So make sure you do the same research. We'll have some of those ideas for you guys tomorrow night in the chat room. Sunday night at 9:30 p.m. we do a live chart session going over the stocks that we're watching for the following week's trading. Excuse me, trying to talk too fast again here. Following week's trading, and we do the research, look at the levels, and we get all the traders prepared so that next in the following morning in the chat room in the morning time on Monday morning, we can gauge them accordingly. So that's how the triple Qs, the monthly chart looks. If we start off with the weekly chart now, the weekly chart, you can see, fix this up real quick. All right. The weekly chart, you can see this has been a pretty rough year for the Qs. I mean, they've been everywhere, trading sideways in a tight range and breaking out and falling back in the range. Hopefully, we can get some nice traction here. One thing that you guys need to pay attention to is this key 68 level. As you guys can see, earlier in the year, we were trading this nice little tight range between this nice little tight sloppy range. Well, it wouldn't be nice and tight if it's sloppy. So this little sloppy range between 67 and 68, we broke out. We broke out back here in March, and then we traded sideways, consolidating. They did a nice little shakeout below this key 68 level right here. But you can see this week we broke right back above 68, and then we actually broke back over 69 as that Friday's action set up a nice little bear trap that squeezed a lot of people out their short positions here. So now if we go hold above 60, 69, that would be pretty good. If we were in fact going to come back and go back down towards 68, that level will probably hold, but that's not what we want to see if we're looking for that momentum fall through on the triple Qs, which if that was to happen, like I was explaining in the blog post earlier this week, was that if we could get this triple Qs to get some nice momentum and actually hold up, with these buyers holding those high bids and having that conviction with that good sentiment, we can actually see another leg up in the market across the board. Because the Qs have been the lag. If the Qs start picking up, we should see the other indices continue higher, and then the Qs finally pick up and follow some steam here and make new 52-week highs. All right, so that's or at least make higher highs, make higher monthly highs here. All right, so let's see how this plays out. Taking a look at the Triple Q's daily chart, we had a little bearish rising wedge that was in play. Again, Friday, last Friday, we had that nice little shakeout that shook in a lot of short sellers, and then of course they got squeezed out. This was a key trend line from the bottom of the wedge. We were not able to hold below and get any confirmation close, so we actually started filling in that gap, and we started moving back towards the top of the range here, and then people just started getting squeezed out their short positions. Then when we finally had the nice little breakout, anybody that was given this area right here as a stop, their buy stop got hit from their shorts, and then we had regular buyers come in. So we had two different buys right here, which gave it a nice little update. We had people that were getting squeezed out of their shorts from this little selling action, action down here, and we had some people getting long for the break over 69. All right, so again, if we can hold above the 69 level, prior resistance right now acts as support, we should be in good shape. And then we want to see the triple Qs break above the 70-25 area or so, and we could see a nice momentum move up towards 70-61, which is last year's highs. And if we can get above 71 and hold, that would be pretty good, because then again, back to the monthly chart, all right, we'll be breaking, if we break over 70.52, we'll be, we'll be above the 70, we'll be above the 50% retracement fib level from the tech bubble selloff that we had back here back in 2000, which bottomed in 2002. Okay, so a lot of good action here for us going into next week. Let's take a look at the IWM, the Russell 2000 small caps. Russell 2000 did not make new highs. All right, but again, it has been the leader, so this is just taking a break right now. I'm trying to maybe give some shine to the other indices. SPY had the shine. SPY had the shine this week. Russell 2000 had the shine a couple weeks ago. The Dow Jones has been shining, for the past couple weeks, making new all-time highs. And we need this NASDAQ to catch up, at least make some new 52-week highs, make new highs from last year, and and start to get some traction here. So a lot of good stuff going on, guys. So the IWM, starting off with the monthly chart, looking pretty good. And put the studies back here on the chart. Nice little trend action going on, holding support from the rising 5 and 8 EMA, a little fast short-term trend lines there, showing us that there is momentum right here in the Russell 2000 on the monthly. On the weekly chart, you can see we're kind of just chopping around these short-term moving averages. They're starting to turn sideways, meaning that we could be consolidating here a bit. If I mark the range on the weekly here, the IWM, you can say we're at 90 is the bottom of the range. Top of the range is right here around 94.81, call it 95. So a little sideways action starting to develop in the IWM and the Russell 2000. Taking a look at the daily chart here, you can see the key level that we want to watch is right here around 92.70. This little pivot high right here, support. We broke below it. They shook the shorts in, shook them right back out. Now we're back above it. If we can hold above 92.70, consolidate a bit, we can possibly make a nice push up towards these 95s. And I would consider that as a possibility if the triple Qs breaks out, and continues with that momentum. So keep that on watch. All right, so let's take a look at the dollar futures here real quick. Dollar futures, they are starting to show that weakness that I've been telling you guys to watch out for ever since we had this nice little rising bear channel break. However, the real momentum in the dollar is not to the sell side. It's not going to come until we break back below 82. But from the short call that we gave out in last week's weekend review video, if you've been shorting the dollar, you've been doing pretty well. Again, we had this nice little rising bear bear channel. As you guys know, these usually break down 75% of the time to the downside. So you want to make sure you are familiar with these patterns, which I am very familiar with these patterns, and the patterns that set up when we have these little failed breakout, these traps, and all these other things that set up that we go over in the chat room sometimes when we see them set up intraday. So again, you want to make sure you make your way to the chat room and check it out. Make sure you watch the videos as well, because we do a lot of educational stuff going out there, and I have some strategy sessions out there that you guys can check out for channel trading, and that's on my personal YouTube channel, Channel Guide Trader. It's actually a Channel Guide Trader strategy session for channel trading. So in any case, check that out. Dollar's looking weak. Let me go ahead and take a look at the euro dollar, see what the euro dollar did this week here. The euro dollar, some nice buying pressure. Same thing for the euro dollar. Obviously, if the dollar had some, if we were expecting some sell side action in the dollar, then we were going to be expecting some buy side action in the euro. Now, I am a little worried about this 131 half or 131 area on the euro. I want to see us get above this 131. I'm assuming this is maybe like 131.12. Let me see here. I want to see us get above this 131. 44 level and hold, and then hopefully try to fill back inside this little channel right here. And I'll keep you guys posted with that throughout the week. All right, let's go ahead and step into the commodities now, starting off with the gold futures. All right, gold futures. Gold futures were down $88 on Friday. All right, it was down 5.5%. This has to be the biggest drop that the gold futures have had in a single day, I would say, since back here in October, maybe this day right here, or this day when they had like a little mini flash crash action right here. So gold's in sell mode, and again, the technicals, as we've been mentioning, have not been set up for the buy side. If you've been watching our videos, and now as we had as we had some more global factors take into the reason why gold got a big sell bar on Friday. At the same time, the technicals were set up. So we'll see how this plays out. Gold, if I take a look at the monthly chart with you guys here, gold is breaking down below some key support levels that we have been holding back here in 2011. Next level you want to watch in the gold futures is going to be down here towards 14. See, down here towards 1400 an ounce. I believe that will be a good level to get a scalp off of because that will be the first touch of the 50-day and 50-day simple moving average, exponential moving average right here on the monthly around 1416. As you can see, we have not touched that moving average since back here in 2008, guys. Here, this nice little trend line break that caused that whole momentum in the upward move and go that we have had for the past 4 years. Okay, so I do think we could get a nice little scalp action off that level. So if we continue to get some more sell side in gold, and gold one mornings sold off overnight like 20 points, and we're extended on the 60-minute time frame, something like that, and we're close to this 1400 level, I do think you get a nice little scalp opportunity off of that level there. So taking a look at the weekly chart here, the weekly chart, gold is breaking down now. On the weekly chart, it's also pretty interesting for the fact that this little trend line that we have right here from the breakout, from this little key inflection point, this key inflection point, and the breakout, that back test of that trend line is going to be coming into this 1440 level, which also lines up with the rising 200-day moving average around this 1445 level. So again, I think gold is coming into an interesting area. However, hopefully we're not caught in this week's breakdown. And take a look at this as well. This nice little downward channel. All right, as you guys know, usually when you break a downward channel, that is not good at all. It's the same thing as having a horizontal price channel, guys, and and breaking down. It's just at an angle. And you guys know if you hold below this level right here, you usually get that follow through. So we could get a nice little short-term bounce, but really until we get back above, I would say 1550, you want to stay away from the long side of gold unless you're looking for a quick scalp or something like that. Aside from that, gold is like in full bear mode right now. Do not look at gold. You have some guys that are saying to pick up gold down here and buy it and buy like the real asset, which is fine if you're looking to diversify in the precious metals, but holding the real physical asset, that's good. At the same time, what's your investment horizon? You have to make sure you plan it accordingly. Are you looking to scalp gold? Are you looking to actually get gold in these prices to hold it for the next 10 years? It all depends on what type of investment strategy you're using. So if you think that gold has a lot of more room to go, then you don't want to try to scalp it right here. But if you think gold has an opportunity to get a nice little bounce, then I think this is a decent level to work off of around this 1440 area. If we break below 1440, then you got to go to that monthly chart and watch that 50-day exponential moving average there around 1400. Taking a look at the daily chart, again, you can see here a big sell bar. It's not looking good at all. Some little minor support that we have coming in here. Put this on a 3-year real quick. It looks to be around, 1 second. Let's see, what's this? Around, yeah, that 1440 level. like we got from the weekly chart. Sometimes, well, not sometimes. I always like to go ahead and take a look at the daily chart to see how it's set up like that on the weekly chart on the daily time frame. So that level 1440 is actually going to be a good level to watch next week on the gold futures. And then, of course, you guys watch the GLD, and the GLD setup here got smoked. The GLD is going to have some little minor support right here from this little pivot from May of 2011. All right, that little pivot point that we have is going to be around the, one second. That little pivot is going to be right here around 142.50. All right, 142.50, which is about $1.50 away. Okay, if we break below that level, next level to watch is going to be down here around 138. Okay, taking a look at the weekly time frame. The weekly time frame is back inside that original channel. All right, take these little drawings out here. All right, you can see that's not looking good, folks. Especially since we consolidated on top of it. Here, take out the study so I can show you guys this a little bit cleaner. So gold futures, nice little downward channel. All right, we were trying to hold above the breakout trend line, which is what you really want to see. Because if this was really bullish, we would have consolidated a bit from right here, like we were doing right here. And then we would have held and we would have broke out. Okay, that's what usually happens with this pattern. But we broke down, and now we have, a nice amount of space, because this should act as an air pocket from my years of studying channel analysis. And we have a nice chance of moving back down towards this 50% channel level right here around the 132 area or so, or yeah, 135. All right, and the daily chart of gold, like I just showed you guys, not looking pretty. I would not. I would wait for gold to stabilize a bit to see what levels the buyers want to come in. All right, just don't go gun-ho trying to buy gold next week because it's down a lot. Let it set up a bit for us here, and then we'll be able to pick it intraday for some scalp and see if hopefully that scalp entry intraday is good enough for a little short-term swing trade on the dailies. All right, that's how we're probably going to play it. Take a look at the GDX, gold miners. Gold miners, we've been calling this whole group short for a while here. All right, take off these channels. Ever since we broke below that key 44 level and we were not able to break above, we've been looking at the gold miners to the short side, and now they look to be, breaking down some more. All right, the next levels you want to watch in the GDX, taking a look at this monthly chart. If we do not hold this 32 level, we have a chance of trading down towards 2730, 2915 will be the next level. Actually, one second, not 2915, 3077, 2915. 2719. Taking a look at the weekly chart, all right, which is the same drawings from the monthly chart. You can see we have this nice little air pocket right here. Why is it an air pocket? Because there's no consolidation right here. Look at this right here. All this action that's happening right here. There's no consolidation right here. There's some consolidation right here. But guess what? All right, we're already below the top part of that consolidation, which also kind of closely lines up with that 40 level. What does that mean? The next level you want to look for is the bottom of that level, which we're right there, pretty close. I think it's going to be right around 31. But if we break below that low, all right, then we have a nice little air pocket that could take us all the way down to 25 and 20. So what's really going on here in the gold sector? Maybe something that most of us retail traders, professional traders, do not have control over. Okay. So if you're in the game and you are an active trader and you watch it charts on a day-to-day basis, you want to make sure you're paying close attention to the quotes of the gold GLD throughout the day here if you're not doing that already. All right. Let's see here. Silver, a little quick snapshot look at silver and copper. All right, silver is in sell mode still ever since it broke out this little dollar range here between 27.50 and 28.50. All right, taking a look at the monthly. The monthly is trying to break through this little short-term. Actually, not short-term. What am I talking about? It's trying to break through this little support that we had since 2011 here. If we hold below 25.90, call it 26. SLV can move all the way down towards 22.25, call it 22, which will be the 100-day simple moving average on the monthly time frame. And then taking a look at the weekly, same thing for silver. Excuse me, silver doesn't have a breakout support level until like around here from that congestion. So what does that mean? This thing has a nice little air pocket right here that it could just fall right through if we continue to get that selling pressure. All right, so some things going on with the precious metals. Obviously, it's to the sell side. It may be something bigger than what we really think it is. We'll have to wait and see. It's, with news coming out on a, globally every day. With the Cyprus bailout, this place needs to get bailed out. This place is selling their gold reserves and all yada yada. We have to see how everything is going to set up in the sector. All right, and right now it is in sell mode. I would stay away, folks. Okay, taking a look at crude oil. I want to start by taking a look at crude oil futures. Crude oil futures, they were down $2.85 on Friday, and crude's been telling us an interesting story. One, because not too long ago, everybody was bullish on crude, right? I mean, it traded all the way up from their 85 to 98. Try to consolidate a bit right here. Try to break past 98 again. Failed. Came all the way down at 90. Buyers came right back in. They traded all the way back up to 98, and now we're right back down. So a lot of back and forth action here, but off of this little last downdraft in crude oil futures, we had this nice little bear flag pattern set up, which broke down on Friday. You have your nice little move down, your little wave up here, and then you have your little move down. So the measured move tells us that we have some more downside action, and the crude oil, and at the same time, this even kind of looks like a little head and shoulders pattern right here. So you got your left shoulder, you got your head, you got your right shoulder. If we take the measure and move from 98 to 92, that's a $6 handle move there. And if we move below 92 minus a minus a 6, gives us a move down towards 86. All right, so that could in fact be the target for crude oil, and that's probably why a lot of these energy stocks are looking weak after having a nice big up day earlier in the week, or some nice bullish action earlier in the week. Some of them started rolling over on Thursday, and then a lot of them got smacked down on Friday. All right, so I mean, let's take a look at copper too. Copper's pretty interesting. Copper's been selling off ever since we were holding below that key 355 level, I believe it was. Yeah, no, 353. We've been tracking copper, showing you guys this in a couple of the videos from before. I don't go over this in every weekend review video, but even copper, nice little downward channel. Tried to break past the downward channel, failed, and we broke back in it. So this is a nice little bull trap action right here. And now if we break below $3.30, we can see copper really get some sell side action, because that level has been a key level since back here of June all the way to August. So we break this key level at 330 and we start holding below that level. Look for copper to sell off down here towards 310. And if that happens, we're going to hear this, all over the news. Copper's breaking down. What is this telling us? And then we may even see the home builder names that have been, on a tear start to pull in off of that. So we'll see. These are just different scenarios that you want to have planned out, so you can create kind of a playbook of what sectors you want to attack and what things are setting up for you. I mean, just alone off this, me looking at this chart with copper getting weak, we've been taking a look at this FCX to the short side. Didn't catch it on Friday, but they have earnings coming out next week. And on the weekly time frame, take a look at this little big inverse head and shoulders. I'm sorry, this big head and shoulders pattern setup that it kind of has here. All right, now you have your left shoulder, you have your head, you have your right shoulder. It's kind of extended, but even if you don't want to call this a right shoulder and you want to call this maybe a descending triangle, either way, it's, these are bearish patterns setting up on these little longer to intermediate term time frames on some of these key companies that we watch to tell us about global growth and the economy. So very interesting stuff. Got to keep an eye on this whole sector, the whole basic material sector. Let's see, what else did I want to talk about? That's about it as far as everything goes, as far as from a macro view and indexes and all that other good stuff in sectors. Just going to talk about some stocks now. Some stocks that we're watching next week. Again, take a look at keep an eye on FCX to the short side if we have some more weakness in the commodity sector, all right, especially in the precious metals and the copper. Keep an eye on FCX to the short side. You can also watch SCCO with that. APC, this name looks pretty weak. Had a nice little rally earlier in the week, but then had a nice little rollover on Friday, and this could in fact possibly be a little lower high off these little highs right here. All right, with support taking this thing all the way down to 83, which means this thing has another $2.30 to the downside in it. Take a look at the weekly chart. It's coming to a little double top up here on the weekly reversal. Take a look at the monthly chart. All right, this thing's pretty much trying to break past this 85 level, but now may try to chop around here. We'll have to wait and see. That's just one stock. I mean, energy stocks, like I said, they were strong earlier in the week, and then they rolled over on Friday, so we'll have to continue to gauge that sector. But those are some stocks that I'm watching at the short side. I still don't really see any huge short sell setups. I still see a lot of long setups. So I'm really focused on the long side, buying dips in these strong names, buying dips on stocks that are strong earlier in the morning and pulling back. Then we're watching the tape to see if they pick up momentum. Then we're getting along those names. NTAP is a name that we're watching on Monday or early next week to see if this thing can get a nice little Bible pullback setup. I did a nice little blog post on my blog showing you guys some channel analysis on NTAP. If you want to check it out, channelguidetrader.com. Check out that post. Shows you some of my channel analysis on NTAP for my channel system. Ross Stores, ROST. Retail was strong. This one looks pretty good. I like how the 60-minute chart is set up on it. I mean, the daily chart, is gapped up. It looks a bit extended here, but you want to make sure you zoom into your hourly if you're a little short-term trader like we are. And you can see this thing is setting up a nice little pattern where it breaks out from the gap up, pulls back in, trades sideways early in the morning. The buyers come in the next day going into the close. So this could get some follow through on Monday morning if you're looking for that 5-minute opening bar strategy setup that I like to do sometimes if I see the setup. Ross, NTAP, NTAP. Lennar had some nice buying pressure on Friday. Nice engulfing candle that ate up the prior 3 days of selling. So keep an eye on this Lennar if you can hold above this 40-50 level. That looks pretty interesting. NVIDIA, we had this on the radar to watch for continuation. NVIDIA, watching NVIDIA if it breaks over 1320 and holds. A lot of volume coming into this name. Maybe there's some news, or some rumors out there on the stock. Not quite sure, but action on the stock on the tape is looking pretty bullish. Keep this one on watch. FDO is looking pretty good. They had earnings last week. The stock actually held up from the earnings announcements. Let's see what the earnings were. Come on. It was 1.22 estimate. They reported 1.21. So they missed by a penny, but the stock is traded sideways to higher. So that's good action on the tape. So you want to watch this FDO stock. I think BBBY, Bed Bath Beyond, kind of did the same thing. They sold off on the earnings announcement, but then the next day they bought it right back up. So that stock looks pretty interesting as well in the retail sector. LIFE, the biotech stocks have been pretty strong. Life, this one has a nice 60-minute setup. First of all, on the weekly chart, it's breaking out, but you can see it on the monthly chart, it's breaking out a bull flag on the monthly. So then you go to the weekly, and you see it broke out there. That's from the monthly breakout, of course. It broke out over 66, got a nice little confirmation close. Now we're going to be looking to see if this stock is going to be a buy the dip stock candidate all the way until all the way from 66. In other words, if it gets some sell side action next week and it goes towards the 66 level intraday, and we see buyers step in, well, then they're probably trying to say, they're probably mentally telling themselves, okay, guys, if it holds above 66, I'm looking to buy the dips on it. That's kind of how we set up in some of the trades that we trade in the morning time. If it's holding above this level, we're looking to be long. If it's holding below this level, we're looking to get short, and then we look for the confirmation. We get more conviction. Of course, if you anticipate it, you could get it. You could get in early, but at the same time, you could get shaken out because you don't get that confirmation. So it all depends on your trading style and strategies. But anyways, life is looking good. BIIB, this biotech stocks have been on fire. You want to make sure you watch those intraday time frames to try to get an entry if you're looking to try to trade the daily trend that they are having right now. BIIB, Amgen being a strong name out there as well. Amgen, nice little breakout last week. Watch this one for follow through. And that's about it, folks. We'll have some more stuff tomorrow night, 9:30 p.m. Don't want to hold you guys up on this nice Saturday night here. And have a great night, guys. Cheers.